Welcome back to Rosebel Education. This is Ed. Today I'm going to be talking about a different stock here. This one here I'm investing in for a long term, so it's my second pick. If you'd like to see my first pick, you'll find it in the description below. Make sure to drop a like to this video to help this channel grow, subscribe, and leave notifications on. If you'd like to join our free Discord, you'll find it in the comments below or in the description as well, just to ask me any questions, to clarify, etc. Let's jump right into this one. So this ticker goes by IAG. It's on the NYSE market, the New York Exchange, and it's called IAMGOLD Corporation. And my second pick really involves gold for a couple of reasons, and I'll show you exactly where the discrepancies that I found between the stock prices for gold companies or mining companies and the gold prices, as well as a bit of due diligence, my communication with investor relations. They've been very helpful answering my questions. And this one, I found it to be a little bit special, and a lot of folks have forgot about it. Given volume is very small onto this, but I'm keeping this one for a while, and I'll show you why. So going on towards the corporate presentation, this one was actually updated on Friday. So thankfully, I'm making this video right now. You can easily see a good perspective onto this company that is up to date. So first off, IAMGOLD is positioned for profitable growth. 3 operating mines on 3 continents with 2021 guidance of 630 to 700,000 ounces. Disciplined approach to realizing value, targeting self-funding model at each operation. Operating improvements. So you got multiple different mines here, but we're just going to move on from there. Here, leading organic growth profile, targeting gold production to more than 1 MOSPA by 2024 at the Gold brought online. So I'll talk a bit more about the Côté Gold. And then attract value opportunities relative to peers. 3 different metrics. Strong financial position, so strong liquidity position of close to $1.5 billion, including almost $1 billion in cash and cash equivalent, and improving operating margins at existing operations. Fully funded growth pipeline with no need to pursue excessive M&A transactions. Culture of accountable mining. Zero harm. Their commitment on both environment and focus on safety is something that is not usually found in mining. Rapid COVID-19 response with extensive steps taken to protect the health and safety of employees and contractors. Robust pipelines of project. Industry-leading reserve growth exceeding more than 75% since 2016 to 13.9 million ounces as at the end of year 2020. Near site district growth, so you have the RGM, Côté, and Fayol and Royam. That's basically pipeline projects, and reseeding the pipeline with long-term investments. Moving on, diversified operating portfolio. So they have 34% of that in North America for the M&I resources, 28% in West Africa, and 38% in South America. The 2021 guidance, as I did mention earlier, 630 to 700,000 ounces, with more than 1 million ounces gold production targeted by 2024. 900, or the current price is cost is $900 per ounce, and they have around 5,000 or more than 5,000 employees globally. 13.9 million ounces is proven and probable gold reserves by 2020, or that's based on 2020, and 23.9 million ounces measured indicated gold resources. This information is from 2020. So mining districts, key operating assets. There's 3 different locations, as I did say. So the first one in West Africa, they have a 90% ownership. In South America, they have 95% RGM and 66.5% in Saramacca. And then Westwood, Canada, they have 100% ownership of this one. And they break as follow. So for the first one here, you have in production since July 2010. Their 2021 guidance is around 365 to 390,000 ounces. In terms of the South American one, you have around 220 to 245,000 ounces. And in terms of the Canadian one, you have 45 to 65 kilo ounces, and I'll go through in detail about this one here. All of them have mining lives around, I would say, until 2030, and they are going on through different exploration. I'll go through that in a second. And right on here, the fully funded peer-leading organic growth profile supported by solid operating base. So the current target by 2024 is 1 to 1.3 million ounces. The current operations is around 630 to 700,000 ounces. In terms of peer-leading production growth, they are at 50 to 95% for between 2021 and 2024 growth. So they are really leading on towards that growth. You look at all the other ones like big names like B2 Gold, etc. They're actually on the negative. And these guys are trying to evolve up. So I think that's actually pretty good. Next, building long-term value, generating mine site, FCF, near-term projects, investing in long-term pipelines. And I'll go through this in a second where I'm talking about how they are different. I know, okay, you might think, okay, they're getting explorations, new mines, and I'll exactly tell you how they're going to pay for that through hedging. So I'll go through that a little bit later on in the video. And I'll try to speed up a little here in terms of the presentation. So the IAMGOLD PMP reserves, we get to see there's 79% growth in reserve space. Moving on. You got tier 1 asset criteria with they need to have mine life of at least 10 years, more than 10 years. Production, annual production should be more than 500,000 ounces. That's for the Côté Gold. That's potential global tier 1 gold asset. And the total cash cost would be the first or the second quartile cost curve. And Côté Gold has more than 18 years of mine life anticipated, more than or around 500,000 ounces over the first 5 years, and they have $600 per ounce for the second quartile of TGC, which is a good cost. Coming on next, here are some of their expected timelines that I'm really enjoying here. So this is for Côté project, and this kind of makes sense for me as a civil engineer. I have a little bit of a knack for mining as well. So for 2021, their major earthwork started actually in Q1, way ahead of schedule than in Q2, Q3. So that's actually a good thing. Now, the process building and close will start in 2022. At the start, TMF Phase 1 complete will be in Q4 2022. Commercial production will start in 2023 and full production achieved by 2024. Now, expected allocation of total expenditures, it decreases as we go, but it's expected to be 875 to 925 million total expenditures from July 1st to all the way to the end of 2023. I'll tell you exactly how they're going to pay for this, so I'm not worried about that cost. Next, after tax net present value, NPV 5% at 100% basis, you get to see that the gold price forecast is looking to be somewhere around the 1,800 to 1,900 US billion dollars. Moving on, or sorry, US dollars per ounces. My bad. I'm used to billions and millions. So moving on, financial metrics. It looks like to be something that is top solid. Moving on, senior notes outstanding, you have $450 million. That is actually extended all the way to 2028. So that's for 5.75% interest, and successfully refinanced old 7% 400 million notes due 2025. And then total liquidity, I did cover that. Leveraging through peers, you get to see what their net cash versus their net debt, etc. So lower leverage is there. It's all looking really good. Moving on, recent highlights: donation to local communities, investments of 1.35 million to improve community access, high quality Medicare. They are part of the community there, and they're trying to help as well improve the qualities in the communities or the mining communities that they're in. Moving on, I do want to move on towards ensuring a robust pipeline, future production and growth opportunities. They have growth opportunities in the Côté in Ontario, Diakha-Siribaya in Mali, Karita in Ghana, Monster Lake in Quebec, Fayol in Quebec, Royan in Quebec, and Pitangui in Brazil. Moving on, you get to see some of the exploration pipelines and how many million ounces are there, etc. 2021 key milestone: the Rosebel return to full mining rates, the completion of the Samaraka construction, the Essakane completion of mill optimization project, growth projects advancing, which is the Côté major earthworks expansion of construction camp, Boto, which is access to roads and other project infrastructure, Gosselin, which is targeting maiden resources, resource delineation, whether it's any of these, and Westwood underground restart and ramp up. So for their operations, they got the Rosebel gold mine in Suriname, and for this one, I did show you. I think I did show at the start a little bit of an overview, but just a quick thing here. For 2020 results, it got around 210,000 kilo ounces at 1,224 ounces. And the guidance here is around very similar. I would say 220 to 245,000 ounces. And moving on as well, they're online in the second half of 2020, so they're back there. Extensive regional land package building on exploration success. And they also launched in 2019 with a $2.5 million endowment. Moving on next. So Samaraka update, you get to see their updates here in terms of where their truck shops, water, gunset, fuel stations, wash bay, etc. Completed 23 kilometers haul road, truck shop, above tire shop, etc. And then you have the Essakane gold mine in Burkina Faso. And this one here, in terms of their 2020 results, was 364,000 kilo ounces at 1,090 per ounce. And their guidance is around 365 to 390 kilo ounces. Mill optimization target is around is a Q1 2021, anticipated around 10% improvement in hard rock processing. Improved throughput and gravity recovery around $9 million capex. And I think, yeah, that kind of sums it up. Moving on, some of their highlights here, including their FS supported increasing mill throughput of 11.7 hard rock from 11.7 MTPA hard rock from 10.8 MTPA. And I'm just going to go a little bit faster here just because we've been doing this video for quite a while now. So they have their Westwood in Quebec. The mine there is around, the 2021 guidance is around 45 to 65 kilo ounces. Moving on as well, in terms of the Westwood hub and spoke model, they have around the Westwood mill capacity here, Westwood underground mill utilization and excess capacity. It goes around 1.1 MTPA nameplate design, and targeted production of 20 to 25,000 ounces over the 2 years commencing Q4 2020. And it goes in as follows: so excelling in potential to provide supplemental feed growth for depletion of the Grand Duc. And this is, by the way, for the Firewall property OP. And then it goes towards the B part, which is the Royan Gold project. And this one has a target potential of 400 to 600,000 ounces at 6 to 8 GT. Anticipated 3 to 4 years permitting timeline. And the first one was Q4 2022. That's the production pending permitting. Now, in terms of the Côte Gold, which I was talking about, or the Côte. So this one here, key permits approval in hand. They do have that in there. And then you have as well 18 plus years of potential life. Their current operation, their ownership currently is around 92.5%. Mining friendly, close to infrastructure, 6 kilometers west from Highway 144. So it's a good place there for moving of that gold, etc. And I did cover a bit of there. I don't think we need to go ahead further. In terms of risk mitigation costs, is around 45% of total expenditure committed. In risk mitigation technicals, you're looking at 73% detailed engineering completion at Q4 2020 and 7+ million ounces reserves at 1,200 per ounce. Moving on. Key project metrics, you're looking at $5 billion in wage forecast through direct and indirect job creation, around $10 billion in estimation economic activity during the mine's operation, and it is good for the communities around. Construction projects, this is the actual camp and what's going on, so looks good. Development and exploration projects. This goes on towards their explorations, yada yada. I'm not going to go through in detail on that because we do have a quick update from the investor relations regarding that. It's very much of almost the same information. Some with their, for instance, their interests for in Monster Lake 100% interest, Nelligan 75 JV interest. And it's telling you about more details regarding the amount of gold in there, etc., or what their exploration progress is. Exploration around the world, so they have drill barge in Gosselin, Ontario, visible gold core in Royan Gold project in Quebec, RC drilling in Diakha, Mali, geological field visit in Peru, IP survey Samarkand, Suriname, and in terms of opposition profitable growth, they 1, diversified operating portfolio, 2, completing value and growth production growth, which we've gone through that already, strong financial position, culture of accountable mining, and robust pipeline of projects. So that kind of covers a lot about it. COVID measurements, etc., some of their actual deposits, how much they have, the costs, everything is in here in this presentation. I do recommend that you go ahead and check it out. And I did cover these mines already in the presentation, so I was going to cover them again, but this video is already long enough. Next, what I'm going to be doing is showing you a little bit of a couple of things. For instance, this is the gold price, the gold prices since 2007. Also, you get to see a peak at 2012. There was another peak around 2020, around September. And I want you to take a look into their chart. Notice a difference? In these stocks, the gold stocks, never had this second peak. And so that's almost a ticking bomb almost going off, and it might actually go ahead and having this peak. The next thing is how they're going to pay for all of that. And currently gold prices is very much close to the 1,700. And let me explain a little bit of how they're going to pay through the new operations using a bit of hedging. And I'll talk to that in right after I go towards their market cap of 1.45 billion, 45 billion, and then statistics. Here's where things get interesting. Price over book, they're 59 cents or 15.59. So that means the price over book you're paying cheaper than the book value of the company. So if they were going to get bought out, for instance, just a hypothetical thing, people usually pay closer to book value. You're getting it at a discount, around 60% discount off what the book price is. Price over sales is very much close to 1. You're almost paying the sales price in general. So that is really bullish for me. I mean, looking at it for a long-term perspective, you're looking at a low price over book and a low price over sales. The SP 500 average there is 2 to 3. In terms of financials, take a quick look in terms of quarterly. You're looking at a net income that looks to be stable there. Net income, common stockholders, you're looking at $63 million. Given that, of course, their last quarter was really good in terms of total revenue, they did have a little bit of a hiccup in 2020, but that is also due to the capital expenditures of the production or the new mine. And here's what they've done to make it better. And I'm going to go towards, this is I think around 4 pages. You can skip through if you would like to go towards the technical analysis, but this is some of the things that I highlighted through my research onto this stock. First thing, Q4 earning transcript. IAMGOLD demonstrated that strong leverage to the gold price with 280% increase year over year in mine site free cash flow, generating more than $223 million. We ended the year with almost $1 billion in cash and short-term investments on our balance sheet, nearly $1.5 billion in total liquidity. Reflecting our long held zero harm vision, we recognize that from our peer-leading environment, social governance practices by a number of independent organizations. At Côté, construction commenced in the fall of 2020 and continues to progress well, with major earthworks have commenced in January. After the seismic events in the fourth quarter, mill operations continue to operate under well-established protocols, processing Grand Duke ore, while the mine remains suspended under the care and maintenance. In fact, we have seen the mill achieve a record date of throughput during this period. At Rosebel, the camp expansion is well advanced following the receipt of all modules required, and we expect to accommodate our full working force through the stage addition of 300 new beds by the second quarter of 2021. The site was operating at 75% of mining capacity at the year end and is currently operating at 85%. And what we're talking here about is coming back from the COVID protocols and making sure that we get 100% operating of these mines through very strict COVID protocols. And to date, we have no COVID cases at Côté. MSCI ESG rating, we're maintaining a rating placed in IAMGOLD at the top 1/3 of precious metal companies. Amazing. We're planning for a global production of 630 to 700,000 ounces per year, and that is the cost of sales between 980 to 1,030 per ounce. The total cost between 930 and 980 per ounce is produced, and an all-in-all sustaining cost between 1,230 to 1,280 per ounce sold. The first quarter of 2021 is expected to be slightly lower level of production than the second quarter of 2020 due to the Westwood underground operations being placed at the care and maintenance, with restarting targeted in the second half of 2020, and also due to lower production anticipated at Rosebel as the mining sequencing continue to advance normal rates, compensating with camp expansion as described earlier. Costs are expected to be lower in the second half of 2021, benefiting from a higher anticipated reduction relative to the first half of 2021. And they're really just talking about getting back to the norm. And so that is bullish for me. Our 2021 outlook for capital expenditure includes the first one here is Essakane, sustaining capital of $60 million. And non-sustaining capital expenditures of $90 million. At Rosebel, sustaining capital of $50 million and non-sustaining capital expenditure of $75 million. At Westwood, it's $10 million and $10 million. At Côté, it's $335 million, and at Boto is it's actually 60 million. For the year, total sustaining capital expenditure will be held at $120 million, while non-sustaining capital total will be $590 million, plus or minus 5%. And in terms of the Westwood demonstrated our leverage to the gold prices in the year, generating $223 million in terms of mine site free cash flow, an increase of 280% over the last year over year. We continue to prudently manage our balance sheets, recognizing that we have substantial capital allocation to transform our growth projects. Again, going to the cash to hand, I'll skip that. For 2021, approximately 44% of the Canadian dollar exposure is hedged, and the range of 1.28 to 1.47. This, together with nearly 145 million Canadian dollars that we have on hand, increased the total 2021 Canadian dollar hedge position to 73%. For 2022, approximately 28% of the Canadian currency exposure of Côté was hedged in the range of 130 to 148, and for 2023, approximately 65% of Canadian currency exposure was hedged in the range of 130 to 146. Looking forward to 2021, we expect the depreciation to range 295 million to 305 million, with cash taxes ranging from 78 to 88 million dollars for the year. We extended our maturity of $490 million need credit facility to January 2025. For the quarter, we are reporting that the total consolidated attributable production of 169,000 ounces, attributed gold sales of 172,000. We've already gone through the cost, so I'll skip all the way through that. We've already gone towards productions of each of the mines. They anticipate the restart of Westwood in the second half of 2021. We're going to move on towards the email part, and it reads as follows. So what's in bold is my question. What's actually written just there is their answer. So thank you for your interest. I would preface this by noting that the hedge agreements that have been disclosed in our financial statements are typically final and non-extendable beyond what is outlined in this agreement. In other words, in order to increase our hedge position, we would need to execute additional new contracts with terms reflecting prevailing market conditions at the time of the agreement. Given that we are currently in a build phase of a major project, the Côte Gold, which is slated to finish construction in the second half of 2023, we wanted to mitigate our gold prices exposure during this period by hedging approximately 15 to 20% of the annual production. So in quarter 4 2020, I asked them, it was mentioned that you're hedging prices of gold, field, and currency. There were mentions of the prices ranging of gold. Are you able to clarify your hedging activities of fuel and currency? And they were talking about referring me towards that presentation breakdown. But during the fourth quarter of 2020, the company executed zero cost collar options contract based on the Brent benchmark in the range of $40.7 to $55 per barrel. For the period January 2023 to September 2024, to hedge attributable fuel consumptions relating to the mining operations at Essakane, the company also executed zero cost collar options contract relating to West Texas Intermediate benchmark WTI in the range of $31.15 to $45 per barrel for 2021, and in the range of $36.10 to $50 for the period of 2023 to September 2024. The WTI hedges are attributed to fuel consumptions related to the mining operations at Rosebel. So that is actually something good, because they're actually hedging as well oil prices, especially with the massive dip that we've taken in 2020 in terms of oil prices. Now, the hedging of gold is set at $1,600 to $2,800 per ounce on 78,040 ounces for 2021, and is extendable beyond 78,040. What happens if you produce more than 80,000 ounces? Is the hedging under these prices only for 2021? And they also asked me again to refer to the MDA disclosure in quarter 3 and quarter 4 2020. But for their 2021, they currently have 114,000 ounces hedged between 1,800 and 3,000, and already the price is already below 1,700, so they will be guaranteed at least a floor of 1,800, and also 28,000 ounces between 1,600 and 2,505, and 50,040 ounces at 1,700 to 2,800. In terms of these contracts are only for 2021 and represent a fraction of the total attribution production guidance for 2021, that is between 630,000 1,000 ounces to 7,000 ounces. In other words, if the spot gold prices dip below the bottom range floor of our hedge contracts, we're able to realize the revenue at the floor price off of the contract, but only for the amount of the ounces under the hedge of the contract. If the gold prices remain within the contract range, we simply realize the spot price. The remaining balance of our production is typically realized at the spot prices. So I asked them as well another question in terms of for clarification about the hedging. They already answered this here, so we'll skip through that. And other than the mines currently functioning and other under construction, are there any plans to expand on acquiring new mines? If so, what regions are you looking at? Our current focus is to ensure successfully executing the Coke Gold project, given the substantial capital required to bring this mine into production. With that being said, we continue to invest into our development pipeline to ensure we move projects along the development path. One example is our Boto Gold, which is a shovel-ready development project in Senegal and sits within a very prospective district. We're currently de-risking the project by advancing project engineering 70% at the year end. Beyond that, we're focused at our Westwood district as well as emerging Chibougamau district, which hosts the Nelligan and Monster Lake projects in Quebec, Canada. We really don't see exploration as something that can just be turned on and off. In order to build a robust pipeline, this requires continued dedication from exploration team with a sustained and targeted effort. We have been diligently advancing our exploration pipeline, growing reserves for over the last 7 years, while the industry reserves continue to contract. As a result, our main focus is currently on our existing portfolio of our projects. So they're growing the reserves, and we already shown that, while the industry's reserves are generally contracting. That's bullish. Again, they are doing a lot of work, and you get to see that the difference here between the gold prices where it really skyrocketed, their price points haven't. You're looking still at 86% lower. And if you're looking at, let's say, the 20 or 17 buck range, and you're currently sitting at $3, the changes there are around 500% easy. So there is a lot of upside is what I'm saying, and people will always want to buy gold. Well, not always, but I'm saying gold is historically one of these things that really go ahead and explode once people start freaking out, etc. And even if the market starts crashing, a lot of people, especially the older generations, would probably buy gold, and these guys hedge their price points, or some of their production to ensure that they don't go under. So, and also the price over book, that's a big thing. So now towards technical analysis. So if you haven't done so, please make sure to subscribe and leave notifications on. I know this is a long video already, but if you have any questions, you can go ahead in the description below, go to our Discord and join it and ask me any questions. I have a dedicated channel just for that. So on a 1 week perspective, what we get to see, yes, the moving averages have been bearish for a while, but it's actually quite oversold recently. The MACD is negative, but this just gives a good indication that a reversal can be happening because of the recent movements going downwards. If you look into the 1 day, the MACD shows that it's going to attempt a positive reversal this coming week. And in terms of momentum, you're getting to see that it's actually climbing closer to zero. Moving averages are still bearish. Above the 340, it becomes bullish on a 2-hour perspective. What we get to see here is that it is attempting still a little bit sloppy, but it's actually bullish on the 2-hour perspective when we're looking at the moving averages. And now, to taking a quick look into the moving average band, we get to see that it's expected 358 on the top, 325 in the middle, and 293 in the bottom is where the price points are expected to go. The Bollinger Bands are 371 at the top and 279 in the bottom. Stochastic fast and stochastic slow are both jumping or going up a little bit higher, and indicates that, well, this was actually a good time to buy. And it's still, we haven't reached our first resistance, so I'll talk to that about it in a second, but it looks like it might be nice to get a starter. For me, I'm going long term. I already got a starter in, but I'm looking to even go ahead and buy more. My goal was 275 and I didn't get there, so if it does dip for a long term, I will definitely continue on and pick some more. So for this, actually, I'm going to go for the Fibonacci retracements a little bit behind at the 673 all the way down to the 144. And we see a significant support. Actually, I don't want to go down 3 years, so we're only going to do 1 year, 1 day. There we go. This is actually a better replacement. 535 to 144. And we're going to go take a look into Fibonacci retracement supports. 293 is the first Fibonacci retracement support. Following that, 236, 144. Significant resistances are 340, 386, 451, and 535. If we were to go ahead and just draw price line actions, we get to see the current significant support sits at 288. Current first, well, I'm just going to go down and then I'm going to go to resistances. 267 beyond there, 248. You're looking at 218 and then 189. Significant resistances. 312, that's a very strong one. 326, above there, you're looking at 351, followed by 362, followed by 383, followed by 406, 437, 464, and 514. Now, it comes to the question to Ed, what do you think about this one? Do you think this one is going to continue to drop? Do you think gold is gone? Gold is a scarce metal. And here's this is one of the most important things that people forget. We use gold in our electronics. So it's not something that is going to go one day. And gold is a precious metal. And as we continue to deplete our resources, and these guys are increasing their reserves, and they're still somewhat ethical compared to the rest of the mining industry, and you see the two gold prices, I think gold is stock like this one here for a long term, and I'm even thinking about leaving it just for, we're talking about months, years. I really don't care, because generally speaking, I see gold in the future as we deplete all our resources from Earth, that gold prices would still increase exponentially, or I wouldn't say exponentially, it would still increase or at least hold its value for the next couple of years. And I think if the market crashes, if you were to look into, for instance, the last week, the market has been red. This one has been almost been green. It started off, I believe, 289 in terms of Monday, and it jumped to 307, and then it's been 4 green candles all week while the market was usually red. So it really shows a good indication of the price movement coming forward. I'm long in this, and even if it pops to $5 on Monday, I'm not selling. I'm in for the long term. What do you think about this ticker? Make sure to down in the comments below. Share, subscribe, and like. Have a wonderful day.